Hello, and welcome to this webinar from wherever you're joining us today. ESG continues to dominate many of our conversation, and if, like me, you'll find it's very hard sometimes to keep up with what's going on. I'm still digesting yesterday's announcements by the European Commission of a package of measures to help improve the flow of money towards sustainable activities across the European Union. Now, I hope that most of our audience today will understand the basics of ESG, so we don't intend to cover this today, as we have plenty of really useful material in the Treasurer magazine, in a blog I write regularly for the membership newsletter, and through our various events, including last year's annual conference with some really useful material, all themed around ESG. So what we will do today is we'll explore the role of treasurers in managing ESG data and the challenges that organizations face when trying to report on their ESG activities. We're joined today by a couple of treasurers and somebody who works for a global provider of financial market data and infrastructure, and who spends all his time surrounded by data. Now, we hope that by the end of the 45 minutes, you'll have a better understanding of the challenges that exist, some ideas on how to manage and advance ESG in your own organizations, and some of the tools available to help you. Now, before we get going, we'd like to conduct our first poll. Now, you should find an area of your phone or laptop that has a few buttons that include Q&A, resources, and poll. And if you click on the poll, it should bring up the first question. So I'd like to understand, how would you rate the quality of ESG data? And you have 5 options: excellent, good, inconsistent, poor, or no ESG data available. Whilst you wait for the results, a little bit of housekeeping. Please take a minute to familiarize yourself with the widgets on your screen. They can be moved around and maximized and minimized to suit you. Click on the help widget if you experience any technical difficulties. And don't forget, there are some resources available during the webinar by just clicking on this widget. We'd be really grateful if at the end of the webinar you do provide some feedback. It's always really important to us to make sure we're covering the sort of topics you want addressed. You'll see a button on your screen that allows you to submit questions. You just see how we're doing. I would like the session to be as interactive as possible, so please don't wait until the end, but submit questions as you go through, and this will make it much more fun for us, and we'll endeavor to cover as many of them as we can. We won't mention who you are or the company you're from, so please ask as many wide questions as you'd like to.
Pleasure to be here. My name is Barnabas Sachs, and I'm Sales Strategy Director for Sustainable Investing and Sustainable Finance at London Stock Exchange Group. And the question that I wanted to discuss with you was around the ESG stakeholder map and actually the role that companies are playing when it comes to ESG. And when with the increased role of finance, the finance department in the corporate life, with Finance 2.0 being quite a mega trend right now, treasuries should have also a bigger role when it comes to discussing ESG and actually helping their own companies to transit to a better and cleaner and more sustainable future. So for companies on the left-hand side that are shown, there are a couple of drivers that are playing an important role to actually embark on the more sustainable journey. One is the regulatory framework, which also Naresh alluded to in his intro. We are going to maybe talk about it more in detail, but this is the NFRD that is now CSRD, Corporate Social Responsibility Reporting Directive. And the other one is the owner push, which is basically the financial markets that are investing in the company and actually have a increasing say as per either investing or divesting, or actually through shareholder activism to basically direct or influence managers' views. The other one is company purpose, which seems to be quite little as an effect compared to the other ones. But when you talk about PR issues, then that really comes into the foreplay. And when we talk about the financials, there are 2 very big ones. One, of course, with different financing mechanisms and divestitures. There is, of course, the financial performance, the overall financial performance that is affected. And this is through the cost of capital. And increasingly, the new kind of trend is that there is higher and higher emphasis put onto supply chain scrutiny. And either as part of the supply chain or a company that is applying a huge supply chain to provide their services or products, that kind of angle has a serious impact. If you are falling out of the supply chain because you are not making the relevant credentials in showing that you are sustainably working, that of course immediately affects your top line. And if there is a supply chain risk, then that also has a direct effect on your top line. So these are the drivers, and the main things around this for Treasury could be, of course, financing the transition. The other one is, choosing the right bank and the financing entity, which has sustainable credentials, investing in sustainability, either in the short or medium or longer term, and of course, monitoring the supply chain and benchmarking the company against other peers as such. We, as a data provider, are of course very equipped to assist all these. What I really wanted to bring to the forefront around financing is that London Stock Exchange Group has the sustainability bond market, which can be a very important mechanism for either primary or secondary angles of financing. So I stop here and I let the others talk, and hopefully, Naresh, you're back online.
Yep, so I hope I'm back online as well. Thanks, Barney. So now I'd like to turn to a couple of folks who use data, and delighted to welcome Joanna Bonnet, who's the Group Treasurer for Page Group, and Tariq Kazi, who's the Director of Corporate Finance for Optivo. So Joanna, can I start with you and tell us a bit about yourself, the company you work for, and your role, and some observations from our poll, and I'll put our poll back up.
So, hello everyone, Joanna Bonnet from Page Group. We're a recruiter. Most of you will know me as Michael Page or maybe Page Personnel, depending on where you are globally. We're in 39 countries globally with 140 offices within those countries. My role at Page has transitioned over the years. So I've been here for about 4 years. Initially, it was just Group Treasury. We then tapped on insurance and sanctions compliance. 12 months ago, I took on the role of Head of Sustainability globally. Historically, there was no sustainability function. There were a collection of people doing some isolated tasks around the group. I'm sure that's no surprise to a lot of you on the call. So 12 months on, we've consolidated that work together. We still have local support from our offices, but we have a central sustainability team.
That's super. And just in terms of the poll, where would you sit yourself, Joanna, around these 5?
Interesting question, challenging. I would certainly say 12 months ago, we were at the bottom end of the scale, at the poor to inconsistent. I think there's no surprise there. We have made huge inroads over the last 3 to 4 months. I would say we're touching on the good and would like to be looking at the excellent by the end of the year.
That's super. Well, I guess a good growth trend to work on. Yes. Tariq, now turning to you, could you tell us a bit more about yourself and your organisation?
Thank you. My name is Tariq Kazi. I work for Optivo, which is a housing association based in London and the southeast area of England. We own or manage about 45,000 homes, which we provide for social and affordable rent and shared ownership. That means that we provide a roof over 90,000 heads or thereabouts. I've been here for 2 years. My background originally was in the private sector, in accounting and corporate banking, and I moved into housing about 7 years ago. My role at Optivo includes, along with being the treasurer and managing all of our funding, includes bringing us forward on the sustainability reporting standard for housing associations, which we, together with a number of other housing associations and capital markets investors, have been developing for the last couple of years. This came about because we are capital-intensive businesses. Across the sector in England, we borrow about £80 billion of money from banks and long-term investors. And we found that by 2018-19, investors were sending their own questionnaires to issuers like Optivo and others who are in the capital markets who wanted to know answers to ESG-related questions. And I understand that there were something like 16 different versions of questionnaires that were doing the round. So the housing associations came together and thought to consolidate all of that thinking in one place and make it more consistent, make it easier for us to start reporting.
That's brilliant. Thank you, Tarek, for sharing that. And we often hear that data is the new oil. And I'm sure, like exploring for oil, it carries many challenges. I brought up a slide that Barney's going to dip in and out of. But Joanna, can you tell us what you found when you took on your role and how you see your plans developing?
So as I mentioned just a moment ago, we are aiming for a much higher response on our reporting capability from where we were only a couple of months ago. 2021 will be a really busy year for the team. There's not a single part of our organisation that we're not affecting, that we're not touching in some way. From a personal point of view, that means I'll be talking to the head of IT, the head of HR, then perhaps someone in marketing, and then maybe a charity a couple of minutes later. So it really does vary. There's a huge amount of silos within these topics, and that translates into the data that we need to receive, that we need to analyze, that we need to make sense of. So what have we done for the first 3 months? So far, we've joined the UN Global Compact, we've aligned our global strategy to the UN Sustainable Development Goals, and we've turned Page Group carbon neutral. Looking forward and how I think we're going to end up and aspire to end up at the good or excellent stage this year with our reporting is we've reviewed what we've done historically. So scope 1 and 2 reporting. In Page, that predominantly means electricity and the consumption of gas in our offices. We're now tackling scope 3. And that's a challenging conversation, particularly given the dispersity of our organisation and how complex we are. So scope 3 for us means we work from home. We've got 7,000 employees. Where are they any given day? Very challenging in a COVID environment because people do tend to change with lockdowns versus non-lockdowns. We're looking at waste. We're looking at how people commute and the all-important travel. Travel may be an easy conversation at the moment while we are in lockdown, but it is a very different conversation as we proceed to opening up the various countries globally. So it will be busy. And it's not going to stop there. We need to then start looking at the TCFD legislation and the science-based targets that we need to strive for going forward. All of this will help us understand what we are doing. It will also help us understand what we need to do in the future to reduce our emissions. It will allow us to be able to measure our emissions properly going forward, and it will allow us to strive to become carbon net zero.
There's quite a lot of data points you've talked about, Joanna. And could you just tell us a bit about some of the different systems, whether it's all very consistent, a bit, I guess, where many people listening into this either found themselves or find themselves today, and the sort of things that that could be helpful to them given your own experiences?
An easy win would be to talk to everyone. It's very hard, particularly when you have so many people in your organization if you're a multinational. But you need to understand what is currently being done. What is blatantly clear is that no one item or one system is the solution. If you're talking about who is working from home on any given day, in what country are you able to access the information? Does it come out of IT for some countries? Does it come out of HR for other countries? Perhaps, again, a third country, the answer could be your swipe card for your building as you walk in and out. Then you've got data privacy issues. So you need to start really thinking about how you need this information, what you need it for, your purpose, because you need to make sure that you're in compliant with the GDPR legislation, for example, here in Europe. Beyond that, you then start looking at travel. And some companies on the call may well have a global travel agent, expense management system. Really, really useful to tap into those data lakes and get that source data. What I've found, we don't have a global travel agent. We tend to have local travel agents, hopefully one per country, but not always the case. And so actually at the moment, it's about getting the data, making it consistent, but also looking to the future to look for harmonization of reporting going forward. It will make everybody's life easier.
Okay, that's super. Tarek, your business is quite different to Joanna's. Do you face the same challenges or are they different?
They feel like they're bigger than the ones that Joanna faces. We're starting from further behind. As a charitable sector that owns and invests in homes, and as a sector, we've got perhaps 150-year history. Some organizations in the sector have homes that are from the Victorian era or before. There's a very big diversity of the asset base that we're dealing with and the data that's available for them. We've got some quite important philosophical and methodological challenges as well in terms of how to define the data and how to define targets. Once we define the data and once we define the target, we're a little bit careful about what to set as a target. And the reason for that is this. The main rationale for a social housing organization to exist is to provide a social benefit, and that is to help people afford accommodation in a way that perhaps the open market doesn't always allow them to do, and to have choices in terms of diversity of tenure and other things. And it underpins many good things like social mobility, social impact, improvements to social cost elsewhere in the economy, whether that's the NHS or the law and order services, whichever it might be. Our challenge is turning all of that very good that we deliver into easily measurable outputs. There are organizations who attempt to do it, and those methodologies are established, but we are a little bit careful about them. There's an additional complexity that we have when it comes to the environmental impact side. So the largest environmental impact from our business comes from the carbon that's emitted out of the homes that we own and that our residents occupy. The challenge for us, as compared with an organization such as Joanna's and perhaps many others, is that an investment that we, the organization, make in improving the energy efficiency in our homes leads to an improvement in the savings that our customers make rather than that we make. It's a very good thing for us to do, to strive for, to improve the energy efficiency of our homes, to invest in them, to measure the data and all the rest of it. In fact, it's mandated by government. But the challenge is that when we do that, our credit metrics come under pressure, whereas our ESG metrics might be improving. So we have some trade-offs that we have to manage. I'm not sure if Naresh is frozen, or are you back now?
No, I'm back. Sorry about that. I could disclose who my ISP is, but I'm probably could be litigation if I say who it is. But no, so thank you, Tarek. It's definitely, I know having spoken to you before, what's very clear is there is a broad overlap, but when it comes down to the detail, I guess there are some quite important differences as we still start to grapple with what E and S and G genuinely mean. Barney, you've shared this slide around climate metrics and disclosure ratios. Did you want to pick out a sort of few things on here that are really you think are important for the audience?
The order of this metric list should be ignored for a second. I will talk about that. But what's important is to highlight that when you are publishing about your operations, there are two things that are looked at mainly. One is the exposure. So what is the current state of, let's say, CO2 emissions, scope 1 or scope 2, et cetera, what's the energy usage? And the other one is more around the management of that exposure, and that would entail whether you have a policy on emissions, whether you have a target on it, whether you have a target date. I saw a question coming in on that as well. So whether you all declare these. And then when it comes to TCFD, it is also important. Do you have an internal carbon price? Do you actually assign an internal carbon price in tonnages to that? And the more information you share, the more transparent your sort of sustainability agenda is, and the more convincing it is that you actually truly embark on that transition route. Now, what is, and this is, of course, differently important for different industry group members. I mean, if you are, for example, a banking services company, emissions is not so high on the agenda as, for example, it would be on a coal or an oil and gas company, as you see on the right-hand side, because the percentages that you see in the middle column is basically, how much weight, for example, emissions would have in a coal company, which is 20%, and in a banking services company, 2%. So let's say if a banking services company is under disclosing these informations, for them, the overall rating that wouldn't have such a serious effect than, for example, in the case of a coal company. The other thing, what you see is in the middle, in the white section, disclosure percentage. And this is a general issue in the market, and is also being handled, hopefully, by regulation as well. Disclosure is basically how many companies in a sort of a coverage are disclosing information on that. So this is not, how many companies you cover, but in your coverage, are these companies reporting on this? Let's say that we cover 10,000 companies in our data lake, ESG data-wise. Then this number would show that 42% of the companies are reporting on total CO2 emissions. But as you say, it's also highlighted in the middle that only 28% target emissions. So even though you are reporting, there is uncertainty and not so much clarity around how you are addressing that issue. And the lower, the more towards the bottom you go, the more crazy it gets. In that sense that, internal carbon price per ton is only available for 1% of the companies. We appreciate that this is a TCFD metric, and it was, put out there like 2 years ago. So it will, hopefully increase in percentage terms, but still, it's quite an important thing to aspire for and require from, to take it into your focus as corporate treasurers and reporters to share information about this. Thank you, Naresh. I don't know whether you're still here. Look, we might have lost Naresh again. He might actually have to disclose the provider. Should we take a couple of questions from the audience then? There were a couple ones to you, Joanna, for example, regarding the net zero. So if you can elaborate a little bit on that.
Absolutely. So we have publicly announced that Page Group will become carbon net zero within 5 years. So we've got till 2026 to do it. There's a huge amount of work involved in this. Again, it goes to every single office. It goes to every single employee to question their reporting, their use of travel, their purpose of travel. Why do we need to travel? Do we need to travel as much? Arguably, some people will others will not. We're looking at how we dispose of our computer and IT equipment, all the way through to looking at our landlords and our green energy attached to our buildings. It's not an easy win. We don't happen to own our buildings. We're not a manufacturer. I completely understand what Tarek's saying as a housing association. I also understand manufacturers and garment processors. They have different complexities. My big complexity with data is not in the E space. Tarek is correct. I'm quite easy to do this. It's easy for me to ascertain this information. The complexity is in the diversity of where my data comes from. But once I've got hold of it, I know what to do with it. For me, my complexity is sitting in S for social, and how do I measure social impact that we as a recruiter have on society and changing society to become better and more prosperous for all of us. So it's very hard, particularly on the social side, because how do you measure the impact on an individual? If I take it in the context of a recruiter, if someone changes a role, they were possibly already they were already employed. You may or may not have given them a promotion. Then it might be a sideways step, or it might be a career change. So if you measure that on unemployed to employed, actually there was no variance in that task. Do they get a pay rise? Sometimes yes, sometimes no, because then some people suddenly swap to maybe part-time or more flexible working. So it's actually very, very hard for us to gauge that information. So it is a challenge going forward. But for my landscape, I do own the entire reporting sustainability landscape. Tarek, do you own the reporting landscape for all of your sustainability?
I contribute to a very big part of it. It's a joint effort between the Treasury team and the External Affairs team, who do all of our external comms. But we also need to bring in the Environment and Efficiency team, whose job it is to improve the efficiency of the stock that we own. The Social Impact team, whose job it is to improve the life chances and so on for all of our residents, and the inclusion team, who work on financial inclusion, digital inclusion, and other kinds of inclusion amongst our residents. So we need to bring all of those together. The reason Treasury has taken the lead role in this, in the organisation I work in, as well as many in my sector, is that's where the queries had started to come from investors. And so that's just brought us into the reporting area. It's a great advantage, as I heard yesterday in our Sustainability for Housing Reporting Forum. It brings finance out of the finance area and into the business. It gets us communicating much more with all parts of the business and gets us strategically engaged.
I completely agree. Completely agree. So, Barney, how many companies have just started their ESG data, and how many do you feel that are still refining their data sets, defining their data sets, and how important is having a complete data set or having a compelling story? Is that good enough?
Wow, that's actually not an easy question to answer. So, look, from a data collector point of view, I think everybody out there, data providing perspectives wise, is going to have a somewhat pre-built data framework, which is going into either rating or more enable scrutinization of different angles like climate change, social, biodiversity, etc., etc. So it's not a disadvantage to sort of know about those. They are either quite public or they are doing different surveys, and it's quite good to be able to be proactively sort of taking note of them. That's obviously the immediate sort of requirement. It's also important to take into consideration what is really material for their own perspective of the company, and maybe start detailing those that that are heavily involving the finance, or materializing also in the financial performance of companies, this kind of dual materiality framework as such. So that's from the own best benefit point of view. And of course, there is a third angle, and this is not an easy task to master, is of course the incoming regulations. So, we have slightly touched on the, I still have to get used to the CSRD, which is relating to corporate reporting, but also, for example, SFDR, which is requiring asset managers to report on different ESG angles of their investments. And of course, where are they going to go to? They are going to go to their own companies who they are investing in and ask them those questions. So basically, or try to get those data first from somewhere, a conduit. So it is always very good to get prepared for that, to avoid kind of, to put out a comprehensive material that involves these three incentives or drivers, to be able to provide the financial market participants with data, and of course to be able to monitor and have it as an honest statement to monitor the own performance and the own transition. And by all means, it's not an immediate, you can get it right immediately. Couple of friends of mine in the consultancy business are saying that it's at least a 3-year project when you, then up until you master that kind of reporting. You first have public what you have, then you realize that that you don't have a lot of things, but it would be great to measure, as you just said, Joanna. And then on the sort of third instance, you just try to look into and try to get a audited or certified, GRI or certified SASB kind of reporting mechanism as such. So get prepared. It's not an easy way forward, but I think if the overall driver is, an honest approach to sustainability goals and reporting honestly about those, then there is not too many things that can go wrong as such. I hope this helps.
So Barney, and thank you, Joanna, for sort of covering for me. Hopefully I'm back for the rest of the session. Part of what I've taken away from that is that rather than waiting till you've got all the data consistent, that it's important to just get going. Is that fair? And recognize the weaknesses in some of the data, that start working through that?
I mean, it's so much of a yes that I don't even want to elaborate on that. So yes, by all means, whatever you have, put it out there, because it's it's an information advantage to the market, so that they actually know what you are doing as a company. And whenever their kind of investment community is asked about why they are investing in you, there is an easy answer to that as such. And I stopped talking because it's gonna be just a yes. I'm over that.
And we picked a bit about regulation, and as you mentioned, the fact the European Commission announced the CFDR thing to replace the non-financial reporting directive. For organisations that currently aren't, could you give an idea? There are going to be many people currently not required to provide any form of ESG reporting. And we know that that's going to change, but are there some key deadlines that people need to be aware of that are going to start to mean they're going to have to get this data together sooner rather than later?
Yeah, exactly. So NFRD in its current form basically applies to big European companies with over 500 employees, and you have to be publicly listed, or really have to be some sort of national interest, heavily national interest. Now that is according to the recently published, so the yesterday published document, CSRD, it's going to be stricter, and the scope is going to be extended heavily. So one is going to be that it will apply to all large companies, regardless whether they are listed or not. And they are going to be also applicable to listed SMEs as of 2026. So, either side of the spectrum you are going to be haunted as such if it's not done. And interestingly enough, I don't know whether that is going to be still final on everything, but non-European companies listed in European markets are going to be also in scope, When it comes to question of whether you are large or not as a company, if two out of the three balance sheet being 20 million euros, or total net revenues 40 million euros, or employee number, here comes the exclamation mark, being above 250, then you will have to, you are basically in scope of CSRD, which is a huge expansion in scope. The proposed reporting start date for this is 1st of January 2023. So that's the year when all the companies in scope will have to put out their first report in that sense. So quite an immediate
this year and next year to get their house in order before they need to start actually reporting on it.
Exactly. I mean, according to the current date, that would be the situation.
So we've got a few questions. I want to sort of pick on some questions. There's one around data on, when we talk about E and S and G, there's a question around data on the G element of businesses, especially where they're not publicly listed, so family or private or VC owned. Barney, maybe one for you. What data are you collecting on this?
Yeah. Oh, okay. So I will try. Cut me short if it's a too long answer. Okay. So basically, when it comes to data collection, the main focus is on publicly listed companies. Non-listed companies are not so much of a focus, just because of the sincerity and complicatedness in collecting these data. And bear in mind, and of course this will change hopefully with CSRD, but currently it's basically, when you try to get ESG data for companies, then you have to go through a quite chunky CSR document, which is heavily textual and heavily PR based. So it's it's not an easy exercise to do that. Hence why there is a very serious justification and data collection planning going on in every anniversary of who are those 1,000, 2,000 companies that you onboard. For companies who are in the private domain and are publishing and really want to get into the mainstream of financial markets, what I would suggest is basically embarking on this on self-reporting, in that sense that, for example, ourselves as well, like London Stock Exchange Group, we have a sort of contributor tool that is nothing else than the company CSR department or whoever is basically responsible for those data sets. According to the ESG nomenclature that we are sharing, you publish your own data from those publicly available documents. So it's, from a data collector angle, it's not collecting and verifying. It comes only to verifying the data, i.e. this kind of data collection cycle is shortened and you have a higher chance, or you have the chance to actually get in front of financial markets. Hope this answered the question, at least partially.
That's great, thank you. So I've got a question here for Tarek. What challenges or limitations have you come across in answering the suite of ESG queries?
I've partly mentioned this before, which is that we're starting from behind compared with other sectors, but we also have challenges that are particular to ours. And I'll give you a simple example. Currently in the housing association space, one of the most important topics is building safety and fire safety, and that's as a result of the Grenfell fire tragedy in 2017. Now, remediating potentially dangerous buildings is a very, very expensive exercise. The cost of remediation is astronomical, and of risk management is astronomical. So if we do the right thing, which we are all as a sector committed to do without any exceptions at all, it is going to have some pressure on our credit metrics. It gets more complicated than that, however, because some of our business isn't a rental business, it's a shared ownership business where we lease properties to people who have got onto the home ownership ladder. So the remediation cost for the share of the building that they own is something we have to make judgments on in terms of charity law. What can we cover and what do we have to recharge? That very quickly takes us into a very complicated area about treating customers fairly, social benefit, environmental benefit, governance, and lots of other things. So it's not at all easy. We could talk about this for a long time.
Okay, super. And then, Joanna, I've got a question I'm going to turn to you on around the banks. So my understanding is you don't have any publicly listed debt, but you do a lot with some of the leading banks. What conversations do you have with them in terms of addressing their own interest around your carbon, your ESG footprint?
Interesting question. So, and I don't think I'm alone in this. Almost every treasurer I've spoken to is talking to their banks about whether it's ESG finance, so maybe a sustainable linked bond, maybe a green bond, or more generally, say, a sustainability linked RCF. That they seem to be on LinkedIn, and people are publishing new ones each week. I think a more interesting part of the conversation is about ESG investment for treasurers and where we place our corporate money. And so it is a conversation that banks are welcoming now, and there are more options than there were, say, 12 months ago, 24 months ago. So the market is developing. There's a much better counterparty risk attached to that market. Certainly different products available, whether it's ESG money market funds or term deposits, that type of thing. So it is interesting. I always think sustainability, diversity, those sorts of questions start at home. And that starts with the relationship team with the bank. And so, if you have one sort of relationship team, the question is, where are those females? Where are perhaps people of a different background? Do you have you've got a multinational company? Is your relationship team also demonstrating that multinational flavour that you would need for the diversity of thought? So it does start with the relationship team, and it's really clear which banks are getting engaged with this, and then also perhaps where others are yet to pick up the pace.
And looking at it from the different part of the same question, when the banks talk to you, they've clearly got to understand your ESG role, activity, how you're addressing ESG as an organization. Could you give us a couple of minutes just sharing your own experience around that, how it's changing, and for folks here who haven't yet had that conversation from the bank manager or the relationship manager, what they should be expecting from them?
I think it is a challenging question to answer, and I think Tarek and I may be unique in the roles that we have with our organisations, because we do have very much of a dual hat. Not every treasury function does. Other companies may well have a very large sustainability team that will run most of these conversations and will be heavily involved in the conversations with the bank. Certainly when the banks come towards me and my Treasury team, we are across the sustainability agenda. When we're looking at the targets perhaps linked to a sustainability RCF, we know what those targets are. We know where the challenges are. It doesn't involve me going back to a different team to work out if we can work within these KPIs, are these metrics reasonable in their approach? Are they achievable? Are they perhaps stretching enough to make sure that we are making those hard inroads? And that's because we own all of that data. We know where we're going. And that makes it probably quite challenging for a bank in that we know what we are talking about. We know as good as what we do know, but we are quite knowledgeable on the subject. And so if the bank is coming and perhaps they've read maybe a one-page brief on what does E, S, and G mean, and they haven't really thought about how that's then applied to Page and the professional services industry, and they don't know in depth what those products will mean for us, where we perhaps have opportunities or perhaps where we will have challenges, the conversation doesn't go very far, because we're very quickly able to ascertain whether it was of use of our time or not.
And just very briefly, are you finding a maturity around? I mean, you shared quite a, hopefully not an example of many banking folk these days, but are you finding a sort of more maturity around the level of understanding and the questioning and the sort of depth of granularity that they're looking in their conversations with you? If you're a treasurer out there, you're not seeing that at the moment. Is this something you've got to be ready for?
I would say yes, and I don't think it's just from the banks either. We certainly get questions from our customers, our clients, our suppliers. We're getting it even from our insurance companies. And so again, you know, our brokers want to know all about our sustainability vision, how we're tackling social impact, and you know whether our directors are part of the sustainability committee, for example. And it's just one item that's feeding into our D&O insurance policy this year, part of the renewal. And so again, we won't be unique in this. This is not a Page thing. It's just an industry-wide thing. So I think no matter what your remit is, whether it's pensions, insurance, just core treasury, it will affect each of your items. And I think whether it's us or the banks, you know, we all need to improve our knowledge and keep stepping forward, keep challenging the topic and strive for a better world.
That's super. So we're getting very close to the end. I think we'll sort of run over a couple of minutes, and apologies again for my intermittent Wi-Fi access. But in the last few minutes, could I ask each of our panelists to provide, you know, one or two closing thoughts? And I'm going to start, Tariq, with you.
One big change that's happened in the last 12 months in my sector is that amongst my peer group, when we're presenting to investors, the ESG page has gone from the back of the investor presentation to the front of the investor presentation. And boards and executive teams are much more interested in hearing the whole story of how we present our ESG credentials, rather than in the past, they might have looked at one topic at a time in isolation.
Okay. Super. Joanna?
I would agree with what Tariq says. For the treasurers on the call, no matter what product you're looking into, you know, if you're going for financing and you are going to go down a green or a sustainable linked product in any way, my suggestion is to talk to the sustainability team early. The challenges they could face regarding data, reporting, information, that those challenges could be immense depending on where you and your organization are in their journey. And with early engagement, collaboration and communication, your journey to whether it's sustainable financing or perhaps sustainable investing could be realized much earlier than you thought, but you do need that early engagement.
Barney, a closing thought for the audience?
It's quite difficult after these two insights. But what I would highlight is again regulations, and it's just not just the CSRD. It's, you know, the EU taxonomy and SFDR. So there is basically a perfect storm of regulations where it all land on is going to be the corporates and requirement to reporting. And when we talk about cooperation, and because of the regulations, I would definitely advise to talk to the reg departments, regulatory affairs teams of your own companies, to understand the different regional implications and the prioritization needs for all these regulatory, you know, compliances as such. And by the way, those teams are also increasingly ESG savvy, so you are not going to be alone when doing this kind of reporting needs.
Okay, super. Joanna, I'm going to ask one quick question for me. And that is, you talked about wearing two hats, head of sustainability, and I'm sure there are treasurers out there maybe thinking about getting more involved in sustainability across their organization. Any quick word of advice or thought? Do you regret it?
No, I don't regret it. I think it gives a new meaning to my role, my purpose. It allows me to think very, very differently from a treasurer, but equally it allows me to become stronger as a treasurer. The skills that I'm learning, I know so much about my business that I would never have had the opportunity to look into or to develop. And it allows my treasury team and the sustainability team to be linked. I think on a personal front, I would strongly suggest a very large cup of tea, because it's a bumpy ride and it is extremely busy, but it is personally very, very rewarding.
That's brilliant. Well, thank you very much for sharing that sort of personal insight. Thank you both. Thank you, all of you, for today. I'm afraid that's all the time we have for. And as always, the challenge is covering such a wide topic in a very limited amount of time. Hopefully many of you will see you're not alone in your challenges, and that success, or moving down that journey of success, can definitely be worth it. We hope you've been given some food for thought on achieving positive outcomes and the role that data providers like Refinitiv can play in supporting your objectives. And let's face it, if you've got services like Refinitiv, you're paying for it, so get as much as you can from it. A reminder, please take time to fill in the survey. Your feedback, as I said, is always really important to us. As you may remember, we've all hopefully got emails. We've got the annual conference on the 14th to 17th of June. We've got the deals of the year. And we've got the third one, which has suddenly disappeared. Finally, a big thank you to Barney, to Joanna and Tarek for sharing your insights and experience. My thanks to Refinitiv for sponsoring this event. Thank you, and have a good rest of the day.